But it's a good time now to get you our first corporate on the show. Ashok Leyland reported a strong performance in the first quarter with net profit and revenue coming in above what the street was working with. It was also a second consecutive quarter of double-digit margin growth. Sonia caught up with the Managing Director and CEO, Mr. Shenu Agarwal, and started by asking him about the outlook for volume growth for the rest of the year. Let's listen in to what he had to say.
The industry is moving well. We are seeing the growth momentum in Q1. We have seen it. And I think going forward, the growth momentum should continue. Ashok Leyland has been doing better than industry for many, many quarters. We hope to continue with that momentum.
Okay, when you say continue with that momentum, can you give us some ballpark number? Are you looking at double-digit growth in volume by the end of the year for the industry? And if yes, what would Ashok Leyland's performance be like?
See, our guidance on the industry was 8 to 10% growth in this year over last year for M&HCV and about 5 to 6% for LCV. We are still maintaining that guidance right now since Q1 has been little subdued against that guidance because of the pre-buying that happened in Q4. We think the growth momentum would actually increase in the rest of the 3 quarters for the year.
Okay, so Q1 was a bit subdued due to pre-buying that happened in Q4. Got that. So you're holding on to the guidance of 8 to 10% for the M&HCV industry for FY24. What about on the margin front? This is the second consecutive quarter that you've done double-digit margins. Is this something that you can hold? Because earlier you had said that you'll achieve double-digit margins by the end of the fiscal, but you've already done it in the first quarter of the year. So what is the outlook for the remainder 3 quarters?
Yeah, that is right. So we were hoping to kind of close the year, whole year with a double-digit margin, and it's very good to see that we have been able to do that in Q1 itself. And that has come because of many factors. I think firstly, our mix has continued to improve. Secondly, we have been able to fetch better prices, and that is on the back of our new products like Avatar and Bada Dost. Also, there has been a very, very focused effort in the company to look at all the costs and reduce our cost wherever possible. So I think on account of all of this, we have been able to register double-digit margins even in Q1. Going forward, definitely we would like to maintain that. Another help that we will get from the margin perspective would be that we think that the commodity prices would continue to ease as we go along in the year. So that would further help us improve our margins.
Okay, so commodity prices will continue to ease and that will help you improve your margins. So are you looking at the 10 to 12% range in terms of margins? Could it be better than that? Because in the preceding 2 quarters, Q1 and Q4, you did about 10 and 11%. So is this the range that you're aiming for?
Yeah, our guidance is still kind of double-digit margins for the whole year. You know, there are a lot of factors that we are watching, but I can assure you that as far as cost is concerned, we are going to continue to put a lot of efforts in cost reduction. Also, as I said, the market should continue to do well in rest of the quarters. Actually, it should do slightly better than what we have seen in Q1. So we are very hopeful that because of all these efforts, we should continue to deliver a strong performance.
Okay, so the market will do better than what you've seen in Q1. That's good to hear. Can you tell me a little bit about the discounting? Because I understand the discounts went down in this quarter, but to what extent and what is the average discounting level now compared to what it was last year?
Yeah, so I think the industry took a kind of a price hike. Not everyone, but most of the players took a price hike in April, right? So that really helped the industry. I think Ashok Leyland, because of the great acceptance of its products, especially the Avatar range and the Bada Dost range, would continue to have that advantage to increase its price parity in the market. So we would see, of course, it depends on a lot of other factors, you know, how the commodity prices behave, how the competitive play is, how the market grows. But we are very confident that if required, we will be able to take a price hike with not so much of a problem.
Okay, so you can take a price hike and the market will absorb that. The market share of Ashok Leyland has also gone up. It's almost at 32% now, 31.7% to be precise. Do you see a scope of improving market share further? And if yes, by the end of the year, any targets?
Yeah, we already said in our investor meet last month, we already said that we want to continue to increase our market share focus. Last year in M&HCV, we increased our market share by 5%. We are very happy that in Q1 also we had a roughly 1.2% increase in our M&HCV market share, and also 1.6% increase in our small commercial vehicle market share. So yes, that is the intention, definitely, that on back of our product acceptance as well as our efforts on the network expansion, we would continue to go for a market share increase.
Okay, any target that you have by the end of FY24?
See, what we said in our investor meet also last month was that our target is to get to 35% market share. From 25 last year, we have already moved to 30 or 30 plus now, and our intention is to move to 35%. Now, of course, that much cannot happen in 1 year now, but I think within the medium term, next 2 to 3 years, our intention is to get to 35% market share in M&HCV.
Okay, well, that's Ashok Leyland.